Africa's May retail sales numbers are out today, and for a preview of that number, we're joined now by Janine van Zyl, who's a retail analyst at Omixa. Good morning, Janine, and I suppose it's a coincidence, but it certainly makes these numbers relevant with Checkers, ShopRite putting out their numbers for yesterday, putting out the numbers yesterday, the trading update, and saying that for the period to June, like-on-like sales just 5%, which is no more than inflation, and that's from one of the retail stocks that really has performed well. And all the retailers down by 3 or 4, 5 percentage points on the news of that. So obviously even more interest than usual in these retail sales numbers. And what are you expecting?
Yes, absolutely, there is, and it's even more interest because for the last 2 months we've had very messy numbers being over Easter, and so May really is the first month that we pay any attention to. What we're expecting, well, we don't forecast month by month, but I think that given what we've seen from Massmart and ShopRite, we can't expect good numbers from the food and the general dealers from their sales. Clothing, I'm a little bit more tentative on. I think possibly we're still going to see relatively good numbers from them. We have heard a few comments from some clothing retailers saying that things were pretty tough at the beginning of the year, but actually started creeping up into May. So I'm not sure that we'll see bad sales on that category. And then once again, the one category that confounds everyone is the hardware category, which has been very strong for a while. And I think that might continue to be strong because we often see hardware being strong in tough times as people still paint their houses because they can't sell them or they can't buy the house they want. So I think it's going to be a bit of a mixed bag. Overall, the final number, I think it might be slightly higher than the 1.9% we saw last month, but that's really because last month was a very messy month.
Just looking at those numbers, I've made the comment in the last week or so in the context of some of the other numbers where there's a seasonal adjustment or an adjustment for a holiday or Easter. And you said a moment ago, the May numbers are the ones we take seriously. Surely a method can be found to adjust for those strange holidays and shorter months and that kind of thing. Because we really, I mean, it's the sort of sector where you really do want a month-by-month analysis if you can get it. Are they working hard enough to adjust those numbers so that we get a true picture?
I'm not really into the workings of what happens at Stats SA, but I don't think it's really possible to do it accurately, partly because some categories in retail trade better on holidays, like clothing, because people are sitting in shopping centres and not at school, whereas other categories actually trade worse on holidays. So I'm not sure that you're going to get one way of measuring all those categories perfectly. And getting the right adjustments. They do their best to just take out the trading days, but that's not necessarily good for retail. It's good for other parts of the economy, manufacturing, for example. But for retail, it's particularly difficult, I think.
Yeah, well, I suppose we've got to the point where they're actually every day...
But as I say, I mean, May should give us a good reflection.
Every day is a trading day in a way for many of those retailers. The one area you did mention the building materials, and of course it's the paradox, so people are doing less, perhaps going on holiday less, perhaps buying new houses to a lesser extent, so they fix their old house with that kind of thing. Plus, of course, that social grant effect, which some analysts still believe is very important, where particularly rural communities and some urban communities pool the social grants and use it to upgrade houses and extend premises and that kind of thing. What about the furniture retailers? Because you would think that furniture retailers at a time like this would be intensely discretionary. You know, the last thing you need to do is to buy a new lounge suite when you've got to choose what you spend your money on.
Yes, I think that we are going to see that. The furniture retail numbers for the last 3 months before this number was particularly weak, and I think that we're going to see that continue because, as you say, it is intensely discretionary. And right now, with the pain that we are thinking is happening in the middle and lower income groups, particularly with some debt pressures on them, we think that people won't be happy to take on further debt, and in fact sometimes aren't even passing the affordability tests to be able to take on the further debt. And remember, so much of furniture and appliances sales are done on debt, on credit. So if they're not able to get the credit, they can't make the sale, and I think that those numbers are still going to be very weak in this result. I think they were down about 4% in the previous, in April, and I wouldn't expect much up from that into May.
Just getting back to those food retailers, I suppose one would expect some trading down in the retail space. So Woolworths, on the one hand, exposed to the upper end of the market, you would say is less vulnerable. On the other hand, maybe there's some people shopping at Woolworths who would now prefer to shop at somewhere that's perceived to be better value for the price.
That is possible, except that I think that the Woolworths customer base is actually very strong at the moment, given that interest rates are so low. And interest rate is by far the primary driver of the upper income. When we see interest rates go up, that's when the Woolworths customer starts seeing some pain and maybe starts looking at trading downwards. So I think that the Woolworths numbers are still going to be pretty strong. I think we've had some trading updates, not that recently, but relatively recently, saying that things are still going strongly. I think about 10% sales growth on the food side. So better than ShopRite. It's really the lower and the middle income consumer that we're particularly worried about. But of course, we'll change our whole view when we start seeing interest rates go up, which is not our base case at the moment, that interest rates will be going up in the next year. So Woolworths customers are still probably okay.
Right, thanks to Janine van Zyl talking
The
there
one thing
about
that does worry us about...
Sorry, carry on, Janine, yeah? Carry on.
I'm saying the one thing that does worry us about the consumer is increases in retrenchments. And that could eventually end up going through to the upper income, but at the moment it seems to be prevalent more in the middle and lower income too. So all the bombs are going off in the lower and middle income right now.
Right.